The manufacturing sector has seen a rebound in activity. Production for July increased by 1.7% after the previous month's near 6% drop. This marks the first rise in production after 2 consecutive months of decline, mainly due to a sharp rise in the production of food and beverages. AngloGold Ashanti is growing its portfolio. The mine is set to take over Egypt-focused Centamin, which owns Sukari, the country's largest gold mine. The transaction is a $2.5 billion stock and cash deal. AngloGold says the inclusion of Sukari to its profile will push its 2023 annual gold production above 3 million ounces. Vukile Property Fund has raked in 1.5 billion rand via an accelerated book build. The REIT initially announced an equity raise of about 5% of its current market capitalization, but it upped the size to 7.7% after strong demand. Vukile says the proceeds will provide it with the financial agility to execute on the opportunities presented by its value-accretive pipeline across South Africa and Europe. Robust, that's how a tax described its annual performance. The property group has reported dividend growth of 19% to 69 cents, and its distributable income has come in nearly 20% higher. The performance comes as occupancy picked up and as collections remained high. Looking ahead, Tax says it's positioned for ongoing growth. It's pointed to developments under construction and an improved pipeline with over 43,000 square meters of lettable area in Waterfall City. Libstar's posted higher half-year profit. The food producer has delivered a 32% jump in headline earnings per share, driven by the strong performance of the ambient products category. That unit includes dry and wet condiments as well as meal ingredients. Libstar has also pointed to improved operating margins and lower finance costs. Old Mutual has forecast a rise in earnings and says its HEPS should register an increase of at least 33%. The firm says a strong operational performance in Old Mutual Insure, Old Mutual Corporate and Mass and Foundation cluster was offset by lower life profits in personal finance. That was mainly due to an increased number of large claims and higher central costs. Caxton has been wrapped over the knuckles. The JSE has publicly censured the paper and packaging group, and it's ordered Caxton to retract statements made on the Stock Exchange News Service in 2022. Those statements primarily related to impact, and according to the JSE, those did not comply with the bourse's listings requirements. Further afield, Apple unveiled its long-awaited artificial intelligence-boosted iPhone 16 and promised improvements in its Siri personal assistant as it rolled out new software beginning in test mode next month. Let's take a look at this report for more.
Apple has unveiled its iPhone 16 with new AI features.
The next generation of iPhone has been designed for Apple Intelligence from the ground up.
Apple Intelligence is the name of the company's artificial intelligence software. It'll be used to improve Siri, Apple's personal assistant, as well as enhancing camera features.
Apple Intelligence marks the start of a new era for Siri and makes it more natural, more contextually relevant, and more personal to you.
Tech companies around the world are racing to add AI to products, and phones are expected to be one of the most important battlegrounds. Apple's announcement on Monday came just hours after its Chinese rival, Huawei, racked up 3 million pre-orders for its trifold phone.
Instead of seeing the first couple lines of your emails, you'll see summaries that convey the most useful information. Your notifications will be summarized too, helping you quickly get the gist.
A test version of Apple Intelligence will be available in the US version of the English language next month, with versions in Chinese, French, Japanese, and Spanish coming next year. But these upgrades will take time to reach consumers in China. Apple Intelligence must be approved by Beijing in order to be released in the country. Last year, iPhones accounted for more than half of Apple's $383 billion sales. Apple is betting that the AI feature will drive consumers to upgrade, as it sees a slowdown in iPhone sales.
And according to a report, the European Union is facing an existential crisis. It's revealed that the Union should increase spending by 800 billion euros per year or face being left behind by the US and China. Here's our reporter, Darling Lachela, with further insight.
That's right, Zinati. The report has been led by former European Central Bank Chief Mario Draghi, and it's urging the bloc to be more competitive. And joining me for more detail is DW correspondent Chiponda Chimbelu. Thanks for joining us today. Now, right at the top, Chiponda, just unpack that report for us.
Thanks for having me. Mario Draghi, a former ECB chief and Italian prime minister, says the EU needs to invest up to an additional 800 billion euros a year to be more competitive than China and the US. Now, while the bloc benefited from a favorable global environment, that has changed in recent years. The era of rapid world trade growth is gone. EU companies are now facing more competition from abroad and lower access to foreign markets. Meanwhile, Europe has lost its most important energy supplier, Russia. Technology is also advancing rapidly, and Europe hasn't been able to keep up with the US. For instance, the world's biggest tech firms, Amazon, Meta, Alphabet, Microsoft, and Apple, are all based in the US. Now, in the report, Draghi mentions that only 4 of the world's top 50 tech companies are European. And the continent may not even have the workforce it needs to support economic growth. By 2040, Europe will be losing nearly 2 million workers each year.
Now let's talk about, how Europe can turn things around then.
Well, Draghi, who is largely credited for saving the euro during the debt crisis, has 170 proposals for the bloc. The highlights include a recommendation that the EU increase investment by about 5% of its GDP. That would help it to make changes that it needs to remain competitive. Now, the fact that the EU has been growing slower than the US may be hampering its digitalization and decarbonization efforts, 2 things that will help make it harder for the bloc to compete with the US and China. The report suggests that EU countries work together to come up with a plan that can lead to more prosperity. Draghi calls for the removal of obstacles, harmonizing rules, and coordinating policies. For example, regulation needs to be simplified. According to the former Italian PM, that is something that hurts smaller companies in particular. So more coordination at the EU level would be needed to foster the tech sector. But whether EU countries can get on board with Mario Draghi's recommendations to fix the challenges they face remains to be seen.
And that brings us to our next question then. What response can we expect from EU members?
Now, that is where the big challenge lies, getting EU countries to agree on how to proceed. And the prospect of bearing more risks together is unappealing for some countries. That is despite economists like Draghi who believe that that would be more beneficial for the whole bloc in the long run. Take Germany's finance minister Christian Lindner. He said Berlin would not agree to the communitization of risks and liability. For him, the problem in the EU isn't the lack of subsidies to foster growth, but the level of bureaucracy and a planned economy. Now, while EU countries rallied together to finance an aid package of 750 billion euros during the COVID-19 pandemic, they have failed to do so since then. While some countries, including Italy and France, have been calling for a new aid package, Germany and the Netherlands have blocked it.
Chiponda, let's leave it there. Thanks for your time and those insights. That was DW's Chiponda Chimbelu. It's back to Zinati now with your markets.